Hello, and you're welcome to Global Business Insights, where you get more on the main business headlines across the globe. Anglo American has turned down another offer by BHP, again saying the offer undervalues its assets. This time, $43 billion, that is 15% more than last month's offer that was proposed. China has fired the starting gun on a 1 trillion RMB, that's $138 billion debt sale to boost the economy. The sale is expected to support investments in key areas and reinforce economic momentum in the second quarter amid a lingering property crisis. Some say the measure is timed to offset the impact of US curbs on China in the technology sector, and especially plans by President Biden to double, triple, and quadruple tariffs on some Chinese goods, including electric vehicles, as early as this week. Amazon and Microsoft are both investing $5.6 billion into France as Macron woos tech giants. This was as France welcomed investors in a major event which started today, tagged Choose France. Many major companies are slated to announce plans to bring their business to France at the event. In the US, of the 92% of S&P 500 companies that have already reported, nearly 80% have beaten expectations. Tomorrow, Home Depot and Alibaba report before the bell. Walmart and JD.com also will be reporting on Thursday. The Wednesday release of April's Consumer Price Index is key. That's the US data in shaping expectations on rate cuts, which still is like an uncertain cloud hanging over sentiment. A lot depends on whether rents and used car prices finally begin to moderate as expected. Brussels is set to issue new antitrust charges against Microsoft over concerns that the software giant is undermining rivals to its video conferencing app Teams. This is as the European Commission moves forward with a formal charge sheet over concerns that it is restricting competition in the sector. Microsoft last month extended a plan to unbundle Teams from other software such as Office, not just in Europe, but across the world, in a move to placate antitrust regulators. On Wednesday, we also get the US April CPI read, like I said, as well as Nigeria CPI read, and we will replay our preview on Nigeria April inflation. Anglo American rejected a revised buyout from BHP offer, which valued it at £34 billion, that's $42.67 billion, reiterating that it was an opportunistic offer and significantly undervalued its prospects. Last month, Anglo rebuffed BHP's $39 billion offer. That was an all-share takeover proposal. The world's biggest mining firm, BHP, had set its eye on its rival Anglo American, headquartered in London but founded in South Africa. Anglo is the world's largest producer of platinum, and it has seen its latest annual profit plunge by 94% in 2023, and Anglo's shares are also looking depressed. And according to shareholders who are opposing the deal, they believe that BHP is taking advantage of this situation, and the deal does not factor, according to them, the huge potential of its copper assets. BHP's portfolio is not as diversified as Anglo American, and they have an eye on Anglo's copper mining assets in Chile and Peru. While 50% of platinum demand comes from its use in catalytic converters for cars, trucks, and buses for internal combustion engines, copper is a major component in EVs used in electric motors, batteries, inverters, wiring, and in charging stations. Copper is tomorrow's critical mineral. BHP, in the new offer, also restated that it will expect Anglo to spin off its diamond and platinum assets ahead of the acquisition, which has not gone down well with the South African authorities, who will need to give the final approval to the deal. The tie-up gives BHP 10% of global copper mine supply ahead of an expected shortage that could send prices soaring. BHP could also overtake other rivals positioning for the global energy transition. South Africa's Mineral Resources Minister Gwede Mantashe told the Financial Times that his country's experience with BHP was not positive, though the government has not officially reacted. The recent hikes in the policy rate by the Central Bank of Nigeria continues to calibrate monetary tightening in a data-dependent approach, which is expected to bring the inflation rate down. Inflation leads to depreciation of the local currency, which leads to more inflation. So you can get a spiral that can only be broken by appropriate measures, noting, of course, the adverse impact of excessive tightening on economic growth. In Nigeria, the supply-related factors such as rising cost of inputs also complicate the effort of fighting inflation, requiring collaboration between the monetary and the fiscal side, especially supply-side reform. March inflation was 33% year on year. It was the 15th month of consecutive increases and the highest print in 28 years. The IMF, in their latest Article 4 report on Nigeria, projected consumer price index will average in 2024 at 26.3% and come down to an average of 23% in 2025. Leading analysts, Financial Derivatives Limited in Nigeria, project the April print will increase to 34.25% from 33.2% in March, as among other factors, the return of petrol scarcity pushes up prices, adding that the planting season in March to May tends to depress food supply, also elevating food prices. Food inflation is over half of the basket and is seen as rising to 40.98% compared to an increase of 40.01% in March. Relatively more stable exchange rates will moderate logistics costs, which will alleviate some of the inflationary pressures. At the beginning of the year, Emerging Value Insights projected 23 to 25% inflation by year end. The central bank announced their own target of 21.4% inflation rate for 2024 year end. Of late, we've seen stabilizing in a marked appreciation of the naira, but implementation of public sector minimum wage increases backdated to January and generally higher wage growth across sectors will raise inflation. Costs for producers are already high, and it was a relief when the news came in that the president had instructed the Central Bank of Nigeria to suspend the implementation of a 0.5% cybersecurity levy on electronic transactions following widespread criticism. We could see inflation not as high as analysts are expecting and an abating in month-on-month inflation as tightening has its desired effect. The IMF, however, drew attention to rising food insecurity, which could imply higher food prices, worsened as food is exported across the borders, also motivated by a decline in the naira. High inflation in Nigeria remains the most significant factor holding back economic growth as the government pushes its reform agenda to emerge as a $1 trillion economy by 2030. President Macron of France has announced thousands of new jobs and potential for more in Paris from Wall Street bank Morgan Stanley, German aviation company Lilium, Amazon, and others. Pfizer and AstraZeneca also announced new investments in France worth a total of nearly $1 billion. The French presidency said Amazon would announce an extra €1.2 billion investment, which could create 3,000 new jobs. Microsoft also announced plans to invest $4.3 billion. All this ahead of the annual investment event tagged Choose France, a summit aimed at wooing big overseas businesses and investors. France has lagged major centers like New York, London, and Hong Kong in attracting investment, but Macron hopes to change that. The presidency confirmed today that this year's Choose France event is targeting $16.2 billion worth of foreign investments, up from last year. Investment capitals of the world are doing much more to attract capital inflows beyond portfolio short-term money. South Korea, for example, says it is ready to launch a $7.3 billion support package for chips investment and research as it sets its sights on joining the leaders in the semiconductor industry. The South Korean program offers policy loans and also proposes the building of a mega chip cluster in Yongin, south of its capital, Seoul, which it describes as the world's largest such high-tech complex. EVI has been reiterating that the war for investment and for technology positioning is one that less developed economies cannot disregard as benign to their interests. So there has to be a response beyond appealing not to be left behind, and it has to be preferably a bolder, united continental response driven by the major political and economic institutions. In the US, inflation is likely to come out higher than the Fed expected this week, especially if earlier related forecasts are correct. But the upside is not expected to be material, only material enough to affirm the cautious Fed Reserve approach. On Wednesday, US April Consumer Price Index is likely to have risen 3.4% over the year in April, down from a 3.5% increase in March. Some analysts see more like 3.5% is what we're going to get, still forcing the Federal Reserve to delay cutting its benchmark interest rates, which means higher costs for all kinds of borrowing, such as mortgages and credit cards. To watch are rising gasoline prices in April, which likely fueled inflation to remain stubbornly high. Other data that is suggesting that wholesale prices for used cars, this makes up a significant proportion of overall inflation, fell 2.3% in April for a 14% year-over-year decline. We'll see what the CPI read shows. Something else to watch are shelter costs, which also carries a large weight in the index and is still experiencing faster inflation than other major categories and is slower to cool than has been anticipated by the US Federal Open Market Monetary Policy Committee. If we do see a downside surprise in US CPI, that could motivate the bulls. But the next FOMC is still June 11-12, a lot of time to consider several other data prints, especially the Personal Consumption Expenditure Index that the FOMC tracks to monitor prices. Also, earlier tomorrow, the Bureau of Labor Statistics releases the Producer Price Index for April. The consensus is for a 2.2% increase year over year, 1/10 of a percentage point less than what we saw in March. The Australian government has failed in its legal action to force X, the social media platform, to remove a violent video of a Sydney bishop being stabbed from its platform after a judge refused to extend an injunction banning the content. The government sees it as a terrorist attack that should not be on the platform and argues that X has not done enough to block Australian users from seeing the video. X has argued that the Australian authorities are inappropriately seeking to censor the global internet. European markets turned lower at the start of the new trading week, but US stocks rose, adding to a decent performance in the prior week, with Wall Street looking towards the fresh inflation data coming out on Wednesday. Looking at the main European and African indexes, Nigeria's stock exchange all-share index down 0.02%, Johannesburg's stock exchange all-share index up 0.28%, FTSE 100 down 0.22%, while CAC 40 is down 0.12%, and the DAX also down 0.18%. Looking at this time, US stocks, as we speak, Nasdaq up 0.34%, Dow 30 up 0.03%, S&P 500 up 0.07%. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Please share, kindly follow on Facebook and LinkedIn, subscribe on YouTube and X. Thank you very much for watching and following. Bye-bye.